Boom. Good morning. Good morning. This is super exciting and super fun. I have not done Zoom via Facebook live yet. So I'm glad I had Madam Sanina to walk us through that. I am going to see if I can track. It's 10:57, so that's good. That means we are actually we're on time today. I don't see any. Okay. All right, so I'm going to go ahead and share our screen. So I make sure that I know how to do that. And I'm looking at Facebook, guys, just so I can see what the lag time is here.
A little bit of a lag time.
Say that again.
It's a little bit of a lag time as I'm watching it on Facebook, I think, here.
Yep, that's what it looks like here. But I'm sharing the screen. I only see us. Can you all see the screen or no?
No.
No. Okay. So let's do that again.
So, Cece, can you hear me?
I can.
You have to share
I see it. There we go.
Oh, wait.
We're there?
I can see it now. Yep.
Wonderful.
All right, just put it in
Presentation mode. Yeah. Okay. Now the last thing I need to see is so I will only see Basil when he speaks. Is that accurate?
Yeah.
Okay.
Now, so you can see me pop up. Does that help?
Yay! Very good. All right. Well, it's 10:59. I'm super excited that we are here again today on Facebook Live. The Dearborn Realtist Board is extremely excited to be participating in Realtist Week 2020. We have been using a theme as we've been in this virtual space for the last 30 days or so now of where there's a realtist, there's a way. And all around being able to ensure that we are providing information, education that is not only useful, but that we know that our community needs. And so, I'm excited to be here today with our guests. I'm going to turn on a little chat over here just in case I need to see that. So welcome. Today, I am super excited to talk about suffering in silence. In the current state that we are in, there are so many things that are happening on so many different levels. And one of the things that we wanted to ensure as we brought this particular conversation to the forefront today was that we were not, and we are not suffering in silence, that we actually have an opportunity to talk through some of the great things that are happening within our community, but then also be available to talk through some of the more difficult conversations like foreclosures and short sales and loan modifications. What I do believe is that as we continue to move through the various phases of COVID-19, that these conversations will probably become even more relevant. And so today I am super excited to have two amazing guest panelists here to talk with us about this very important conversation. Of course, I have to start off by saying we are extremely honored that President Courtney Jones of the Dearborn Realtist Board has given us this platform and this opportunity to talk about valuable information, to share it with the communities that we love, serve, and trust. And I'm just excited to be here. And thank you. So who are we? Who is the Dearborn Realtist Board? I think that it goes without saying it's extremely important that we talk about who we are in the dynamic of the conversation. And the Dearborn Realtist Board was actually the first housing organization for us by us, for a lack of better words, created in 1941. And what we stand for is democracy in housing. So we are definitely at the forefront of economic development and housing in the African American community. Of course, if you would like to join us, you can always visit us on the web at dearbornrealtorsboard.wildapricot.org. And now we're going to jump right in and introduce our panel. So we have two amazing experts from EV Law Office, which are both foreclosure defense attorneys. I'm going to let them both give or have an opportunity to introduce themselves to the audience today. And first up, we have, I just call him Faisal. So Faisal, welcome to the conversation. Please take a moment to introduce yourself to our Facebook Live audience today.
Yes, thank you, Cecilia, so much, and thank you to the Dearborn Realtist Board and Courtney Jones. And that picture is a wonderful picture of me. I wish it looked that good. But so I'm an attorney at EV Haas, EV Law Group. We've been doing foreclosure defense for years, and I've been trouble, borrowing, and restructuring companies and individuals for most of my career, so for the last 20, 25 years. And the board, I'm a board of the Dearborn Realtist Board. I've been honored and the pleasure of being on the board.
So Faisal, I'm having just a little bit of a difficult time hearing you. I want to make sure that our live group can actually hear you. So I'm going to just ask. It seemed like your connection was going in and out just a little bit.
Okay. Is it better now? Let me see if I can shut down some extra things that are going on. Yeah, I don't have anything else. How's the internet? Is it better now?
Keep talking. I did just get feedback that that it's a little bit difficult to hear you.
Gotcha. Okay. So I'm an attorney. I'm also a member on the board of the Dearborn Realtist Board. I myself have been working and helping borrowers for most of my career, for over 20 years. And at EV Law Group, EV Haas, we've been doing this for the last 10 years. I've gone through 4 crises before even getting to COVID-19, so we've been in this space for a while. And not only have I helped others get through this, but I myself have personally experienced what really got me into this was I myself have gone through foreclosures, and I've got other family members who've gone through foreclosure, and I've helped them weather through that. Even before the 2008 crisis. So this is a special space for me in terms of trying to find and help people get out from underneath this. I hope you got all that.
Thank you for sharing that. And I'm sure that as we continue through the conversation, we're going to get some hands-on, and it's always amazing when, individuals are available to be transparent and to share, just from a place of personal experience. So thank you for sharing that, and we're looking forward to diving into this conversation. Thank you, Faisal.
Absolutely.
All right, we are going to jump right on over to Damon.
Good morning.
Good morning. Thank you for joining us.
Pleasure. Thank you for getting that picture. I realized I hadn't sent that over to you, so I'm glad you were able to locate that. My name is Damon Rittenhouse. I'm an attorney at EV Haas. I've been working with Faisal for over 8 years now. We pretty much exclusively defend people in foreclosure. I handle all the litigation in Cook County and the Collier counties. We started doing this right when the last housing crisis was peaking. So like Faisal said, I think we've got a lot of lessons and ideas and things that we're going to try to put in place as we see where this goes. So I'm pleased to be here today. I think being proactive about this and getting information out there is really the best way to try to get on top of what's coming down the pike at us. So we're here to be a resource. I'm happy to answer questions as we go through and talk about some of the experiences we've had so far and what we think might be happening, in the immediate future, and then a year or two from now down the line as this kind of works its way through the real estate market.
Wonderful. Thank you for sharing that.
Pleasure.
All right, so we are going to jump into this lively conversation about foreclosures, short sales, and loan modifications. And I really like to start the conversation off, and we're going to kind of just, we're going to have a volley here. This is going to be a very interactive conversation, but I think that one of the things that stops us from sharing openly about, when individuals are in trouble or when they begin to notice those first signs of potential, losing of a home. There are many different reasons that this can happen, but we're not always open to talking about it. And I think that a lot of individuals typically will shy away from just even engaging in the conversation for one reason or another. So Faisal, can you kind of share with us what just some of the things that get families or individuals into financial trouble that would even have them, beginning to look at a conversation of modification, short sale, or foreclosure?
Sure. I've always said that people are usually, especially, I guess, in the 20th century, the 21st century, in these times, even pre-COVID-19, that everyone's really about 2 disasters away from, foreclosure, right? So, usually in the past it was, my transmission blew and then the boiler went out and they cut my hours at work, right? So, those successive things that happen in a very short amount of time is what usually triggers someone, I got to decide whether I'm going to eat or I'm going to pay my mortgage. Do I take care of my family? Do I pay medical bills? So it's when they get to that point where financially there's a discussion or a decision that needs to be made as to what gets paid first. I'm hoping you guys can see me my connection is better now. So in COVID-19, right, in this shutdown, literally it's every single disaster hitting at the same time. And so there's real questions as to, I don't have enough income coming in. I don't know if my company is going to be around that I'm working for. I don't know if my business that I own is going to survive the next 60 to 90 days. So really the big question is the change in income and what you anticipate is going to happen going forward. What I've always advised my clients or our clients, and I've always advised especially businesses, is if you are making a choice or a decision when it got to the point where you don't have it anymore or you don't have the money anymore, that decision is you've waited too long, and sometimes that's the only time it is. So the more preparation you have, right, of like right now calling the bank and saying, hey, I can't make my payments, calling utility companies, saying, hey, do you have a reduction in payment? Comcast, for example, they're giving credit, waiving 2 months of internet service. So there's a time right now where everybody's willing to take less in order to get something in their door, for example. So I think the points that you raised of right now, you've got loss in income, economic insecurity, those are all things that would trigger to begin having a conversation and thinking about what do I do differently or how do I make my next payment. Then the other thing that you had talked about, Cecilia, which was really, really a very big piece, is there's this internal shame about it, right? This fear to actually talk about the fact that you have or I have financial trouble. And what I found is if you don't talk about it and bury it, it only gets worse progressively, and the options available get fewer and fewer. What I have found comfort in is that I'm not the only one. I mean, I think I think we're close to 30 million unemployment applications, unprecedented. The SBA loans, they had 14 years of applications from companies that were 14 years of applications filed in 14 days.
Wow.
So the mortgage servicers they're doing 8,000 to 22,000 forbearance applications a day since mid-March. So there's no shame in where we're at right now. And so that's the biggest problem I think that people have to overcome is asking for help. There is help out there. You just have to look for it. And then at the end of the day, it's the willpower. So we are survivors, right? We're people who just survive hardship, and that's really what it comes down to is the will to fight.
So I'm going to ask you another question, just as it relates to, that we uncovered that one of the reasons why we sometimes are not willing to talk about it is the internal shame, and I definitely think that that is the case, and that's true. I would like for you to speak to, you've already also shared that the reality is most of America right now is in this situation. If families and individuals are finding themselves in this situation where the trouble is looking like it is about to come forward and bring itself forward, one of the things that I found is that if someone does actually reach out to me to help them or give them guidance in any of these areas that we're going to be discussing today, a lot of times it's the ninth hour. And in the ninth hour, it's a whole different game to play. Can you talk a little bit to that?
Yeah. I mean, I think when I'll share a few things, and I know it's really hard to be vulnerable, but and I know on Facebook Live, so everybody's now going to see my vulnerabilities here. But I personally went through foreclosure, and my family went through that foreclosure. And I was lucky in that I was just not willing to lay down, and we fought. And there was a tremendous amount of shame about that, right? So how could I be in foreclosure and everything else? And at the same time, it was hard to reach out for help and ask for help. But had I not started early on for help, I would not have been able to sustain 9 years of not paying a mortgage payment until I was able to finally get back on my feet, right? So, which in itself is unheard of, but that was because we reached out and did the initial resources. We called the lenders, we did forbearance requests, we did loan modification requests, we kept filing. When we would get denied, we would apply again and then get denied and apply again. We must have submitted 4 or 5 short sale applications and 7 or 8 loan mod applications. And so we just kept trying. And I also reached out to professionals. It's important to connect with people who are, or professionals who understand this, or at least in the field. That is obviously lawyers, right? But you're going to want to find a lawyer there, right? This is their main thing, what they do, versus guys, everybody's in bankruptcy, let's go start doing bankruptcy, right? Everybody's got financial problems and loan mods, we now do loan mods. So you're going to want to find someone. The other one is mortgage real estate brokers. So your fellow realtists. The realtists have experience to, and we'll talk about that as we go along. But the sooner you reach out to the professionals in your life, who can then connect you to other professionals who may know and help and assist, that's one big thing. And the other big, huge mistake that I have seen many do is they start dipping deep into their reserves, their 401ks, their pensions, all things that, and Damon can speak to that as well, those are untouchable by creditors. So what you've done is you've taken money that no one else can touch and use it to burn something that they really can't. Like, for example, you could bankruptcy and wipe out your mortgage debt. I mean, the house still owes. It doesn't mean that you have the house free and clear, but at least you're not liable. However, if you take money from your 401k, you've now literally written off your future, so that way you can pay a current debt. So those are kind of some of the things, and right now the big thing is the shame. There is shame because this is not about or what I did wrong. This is not about you or anybody who did anything wrong to get where they're at. There is a global pandemic that is totally outside of our control.
Agreed.
I think I answered, and then some.
Yeah, thank you. Thank you for sharing that. I'm going to jump over to Damon before we go to our next slide, as we, begin talking about loan modifications are going to be up first. But we do have a question in the chat room, so I want to make sure that we're attentive to our audience as well. And the question that is right now in the chat room is, can an individual still get help with a forbearance or a modification if they were already behind prior to COVID-19?
That's a good question. Without getting too technical, I think it depends on who owns their loan and what the servicing guidelines are for that particular loan. My advice to that individual would be please apply. That I'll echo a lot of what Faisal said. I think right now it's going to be a little bit different than what we had coming out of the last crisis, because the shame piece is not associated as much of I made a bad decision or I took out a loan I couldn't afford. It's we're all in the same boat. We're all getting slammed. So I think it's not going to be as much of an issue of people being disinclined to reach out in the first place, although that could still be a problem. I think there's going to need to be persistence and creativity, because I think these institutions are so completely overwhelmed right now. My bigger fear is that people will get discouraged. They'll reach out the first time and not get anyone to answer their question, or they'll get incorrect information. So the larger point that I want to make is start reaching out now and be really, really diligent and persistent, because I think there is a lot of assistance out there, but I have a strong feeling, and I'm already seeing early returns, that a lot of these loan companies are not set up to handle the volume of requests that are coming in, just like unemployment requests have completely crashed the system in Illinois. So that's my answer generally. To the individual question, reach out and talk to your loan company and figure out what's going on. I don't know. I think loans that were in default may not get the same type of across the board assistance as if you're about to go on a default, but I don't know that for sure. And I'm not sure that that's been clearly outlined or articulated in any of the new programs. So I would encourage that person to just reach out and explain their circumstances, and hopefully they can be covered under, a broader thing and not get stuck with some technicality of, hey, you were in default in January or February. This isn't a COVID issue. So I think they're going to have to reach out and see what resources are out there. And like I said, just be diligent and persistent. If they can qualify for some COVID assistance, excellent. If they have to go underneath, another hardship, there should still be mechanisms for that person to either get a forbearance or a loan modification under pre-existing programs.
Awesome. Thank you so much for that. And I think that you are absolutely correct in terms of persistence. I actually have a borrower that completed their mortgage process with me about 2 years ago now. And they reached out to me because they were having a difficult time with understanding why their payment went up based off of real estate. Well, what it appeared to be was real estate taxes. So, I offered to get on the phone with him, and it was right at the onset of this pandemic. And we were probably on the phone 2 or 3 days in a row for at least 2 hours. And at the 2-hour mark, we still had not reached a representative. So I definitely believe that persistence is going to be key, and follow up. And, we also have some more things that we'll be talking about as it relates to documentation as we continue into this conversation. But I do know that, when a person or a family realizes that the property is no longer affordable for them to keep, one of the toughest decisions at the onset of that conversation is really, 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 getting comfy with that whole idea of the conversation. I want to go and I want to talk about, and Faisal, I'll let you jump in here, step one, let's say that a borrower has, their primary residence and then they also have additional investment properties. What is that particular individual, what should they be focusing on at that point?
That's a very good question. There's a lot of right now assistance, and I guess it really comes back. I'm going to take a little bit behind that is what kind of loan it is, right? But your home versus your investment property, those are two decisions that have to be made, and they're treated completely differently. On the home side, if it is a government-backed loan, Fannie Mae, Freddie Mac, HUD, VA loans, FHA loans, those are getting forbearance and deferment assistance from the government, and that's on your personal home. Now, if it's a 1 to 4 unit building in terms of an investment, and you live in it, that would also count. So like a person lives in 1 unit but rents out 3 units or 2 units, those count as, and if they're Fannie, Freddie, or government backed, they will have support. So differentiate between an investor property and in your home. So you really have to hit them both. And the issue with the investor property is figuring out how to collect the rent. If it's an investment property that is a bunch of commercial storefronts, you clearly are going to have a lot of problems with your tenants not paying their rent, especially in the commercial side. If they're tenants and they're renters who are, tenant renters, residential, they're also not going to be paying or might be paying short rent. But on investment properties also, they're talking about assistance and support from, for example, in Chicago, the CHA, or even HUD if you're getting HUD payments towards rent contribution. So in that sense, at least you've got hopefully some money coming in if it's government subsidized housing. So I think the first question would be handle your home first, if I were to pick. On your monthly nut.
So I think you're freezing up again there just a little bit. But the last thing that I heard you say is for sure take care of home first where you live. And then for investment properties, those definitely need to be addressed. And depending upon who owns, who the servicer of those mortgages are, is going to be dependent upon, what type of assistance would be available there.
Exactly what I was saying.
Wonderful. All right, step number 2. So now that we've identified, okay, I am not able to continue with the payment. The second thing that we want to do is to begin to attempt to work out a modification of the loan with the bank. And so Damon, you were just speaking to that piece. Can you talk a little bit about the modification process itself?
Yeah, sure. And a lot of what our experience has been in this pre-COVID space. I think the format is going to be fairly similar, but I'll talk about what I think some of the differences could be as well under the current circumstances. But essentially, you're asking for a modification either because you've had some kind of short-term interruption in income, or you're trying to get an interest rate adjusted down. You're trying to make the loan more affordable. Usually, in a short term, if you can get a principal reduction or some other kind of reduction, that's great. Those have become a lot less common. I don't yet know where that's going to go in the COVID era, but ideally it's trying to get your monthly payment back on track. And most commonly, it's because people have had that illness, that injury, a reduction in hours, et cetera. And essentially the loan company is taking the months of non-payment that have accrued, any kind of taxes or insurance that they might have had to pay on behalf of the property, and they're capitalizing it generally and spreading it over the loan. So it's really, it's kind of akin to a refinance, but it's really a redoing of existing loan terms, to make some changes, whether it's in the amount that's owed, the interest rate, et cetera. It can be a fairly document intensive process. Usually it starts with reaching out via telephone Depending on the loan servicer, you can get stuff initiated through a website. Sometimes if you get behind, they'll proactively mail you an application that says, hey, you're 30 or 60 days behind. Please fill out this request for assistance. This is where I think the diligence and the persistence pays off. For anyone who's worked with borrowers doing loan mods, you know it can be a lengthy process. I can only imagine it's going to get more lengthy and more bureaucratic because of the volume that's coming in. So my advice is be as organized as you can. Document everything you're sending in. Usually it's bank statements, tax returns, etc. I don't know if those requirements are going to change with applications that are coming in now. But generally what they're wanting you to do is document a hardship. And then when it's time to modify the loan, document that you can afford these new monthly payments. There's got to be some ability to for the bank to understand that, hey, I'm back on track, or hey, I can afford my monthly payment. That's the whole point of doing the modifications. So the key is to reach out for help ASAP, and then to just be diligent in documenting all your efforts, whether it's telephone calls to follow up, whether it's faxing documents over, emailing them over, responding to missing document requests. Again, it's a very labor-intensive and a very document-intensive process. I think the folks that have success and the ones that we help, it's because we're just really diligent and we follow up aggressively. And I think that's going to need to be the case here. And it might take even months longer than it has in the past. What I'm seeing and hearing and what I'm understanding, at least from the government-backed loans, is they're going to do the forbearance in the short term. So that's essentially kind of a stopgap or a Band-Aid to say, hey, we're just kind of hitting the pause button because we know you can't afford it. At the end of a fixed period, 3, 6, 12 months, then we'll modify the loan. So it still kind of remains to be seen what the actual modification process is going to be. But like for the person who had the question earlier that had a default for other reasons, presumably than COVID, they're going to be following a process very similar to what I'm describing right now. They need to fill out that application. They need to submit those documents. What's tricky for a lot of folks is that it might be hard for them to say, I can't afford my loan right now. So they may be applying for a forbearance as opposed to a modification in getting the payments back on track. So there's going to be some variability, but it all starts with seeking assistance and then making sure you don't get lost in the shuffle or that your paperwork doesn't go into a black hole somewhere. That happens under the best of times. When we first started doing this, they really were not set up to handle the volume. As foreclosures declined, that got a little bit better, but boy, we still had modification efforts that took months and months. I have a feeling we're headed back towards what I call the Wild West type of situation here, where the volume is just crushing these loan companies. So people are really going to have to be prepared to kind of hang in there and do what they need to do and be as diligent as they can. And I'll speak more as we move on about steps to potentially set up for litigation, if your modification isn't handled properly. But in the short term, it starts with seeking assistance in any way you can, and then being really diligent about submitting your paperwork, crossing the T's, dotting the I's.
Wonderful. Thank you so much for sharing that. As we move into step 3, and we talk about some different options, or before we actually jump into some different options, that in the event a loan modification is not able to be handled, or the options are not feasible, we're going to talk about some other options that are available. But before we leave this conversation of the loan modification, we talk through what it is. One of the questions and the conversations that continues to kind of come up for me as a lender is the conversation of, I can still make my payment today for this month, but I'm not sure what it's going to look like in 60 to 90 days. And I have actually been encouraging borrowers, in the event that they can still make their payments, to continue to do so. And I've been coming from a space of we don't know what the rules will be, once, for a lack of better words, the tide kind of it relaxes. We don't know what the rules are going to be. We're still waiting on what the outcome and the other side of forbearance will look like. So if the banks are putting a pause on payments right now for 30 days, for 60 days, for 90 days, even up to a year, at the end of a year, one of my fears is that they'll be able to create the rules in a manner that is potentially beneficial, not necessarily for the homeowner, for the majority of homeowners. and I want to be respectful. But I also want to kind of get your feedback on that. Basil, is that something that you can kind of speak to a little bit?
Yeah, I think, I mean, I had to make the personal choice. Do I make my mortgage payment this month? Do I wait? Grateful and thankful. I can make the April payment. I made the April payment. The question is, what do I do for May? It really depends on every individual's circumstance, right? I can make the payment, but if I know I don't have a job and I've got no work because I work in a restaurant, then whatever money payment I'm spending now, I'm not going to have money to eat next month. So those are real personal decisions. I've always advised everybody I've worked with was your family comes first, right? Number one, what do I need to feed my wife and kids? Period. Or my parents or whatever family I've got, my siblings, right? So that always comes first. The bank will always get their bailout. The bank will always get support. They have insurance that insures against this. So when you don't pay your mortgage, they get paid from insurance companies that give them money. So, and that's a whole nother webinar on its own. However, the point is they have a backup. They're planning for your default. So if they're planning for it, you should be planning for it as well. That's my advice, and it's everybody's circumstance. So if you've got a steady job right now and money's coming in and you see it, you're not sure if it's 100. I don't think anybody's sure of 100% anymore. But if you're at least sure that you have not been furloughed and you're probably going to get a paycheck through the end of the month or even in May, you know what? Make your payment. If it doesn't look like that's going to happen and things look nervous, definitely talk about calling the bank and making arrangements to either have a half payment, lower payment, loan modification. There's a bunch of things. So that's a very important question. Good question, Cecilia. And also chime in, Damon.
Yeah, I'll echo what Faisal said. I think it really is an individual choice. One thing that I hear a lot from borrowers, I don't yet know if we're going to be hearing it now, is that the lenders will not work with them until they miss a payment. So historically, if you call in and say, well, I can make April, but May is not looking good, they're, for various reasons, not willing or able to work with you until you stop paying. So I'm wary of ever making a blanket statement because I think there is a lot of variability out there. But Faisal's rule of thumb, I think, makes a lot of sense. You got to look out for yourself first, because even if the banks are not nefarious actors, they're going to be fine. So you need to figure out, what can I afford? And then again, if you're being told, look, we can't even offer you any type of relief until you're in default, that might make the decision for you. Is kind of frustrating as that might be. That's how it historically has been. I'm not yet sure, and I don't have enough data back from folks on what kind of responses they're getting if they give the hypothetical. I don't know if I can pay May, or I'm not sure I can afford to make a full payment. My belief would be most of these companies are going to say, keep paying for as long as you possibly can. Rob Peter to pay Paul, however they articulate that. So I'd advise people to be really clear-eyed about their personal situation and not feel any shame or undue apprehension. If you have to stop paying, that might be the first step to getting assistance. It could be a threshold issue. I'm not sure banks are going to proactively work with people who are still paying the mortgage, even if they're taking money out of their 401k to do it.
That makes a ton of sense. Thank you for sharing. So, Damon, you were just sharing some of the different options as it relates to how the bank, begins to look at adjusting the payment. And so it's everything from, lowering the interest rate to deferring the payment for a period of time, which is what we're seeing the banks do right now, extending the life of the loan, changing some of the terms that, could potentially avoid a default or a foreclosure. And so I would like if you could share any insights that you've had as it relates to, I think lowering the interest rate is a pretty straightforward one, but deferring the payments for a period of time, we just kind of covered that a little bit, extending the life of the loan. What are your thoughts about when an individual now receives their loan packet back from the bank, and one of those options is to extend the life of the loan?
I think again that's everybody's situation is going to be a little bit different there, but oftentimes that's the best and perhaps only way to make a monthly payment affordable again. And it depends on how long a loan's been in default. Faisal and I have had people over the years who have been in default for a very long time, and their arrearage is pretty substantial. The only way to get to an affordable monthly payment is to spread that over a new 40-year term. So I think it's individualized. I don't yet know what modifications of these COVID loans are going to look like. I think we're probably going to have to wait for a year. Some of these are going to be in forbearance, and I've kind of seen general language that we're going to modify this. I can only presume that means extending the life of a loan or capitalizing deferred payments. That remains to be seen. But to answer this question, I think that's the most common thing that we've been seeing over the last few years when loans have been in default for any period of time, but certainly if it's been, more than a year, they're extending that, sometimes making a new 30-year term. It's not uncommon to get 40-year terms. And some people are okay with that. And some people say, boy, I don't feel like I'm ever going to be able to pay this off in my lifetime. Kind of depends on what your short and your long term is. It really, the goal for the banks is how do we get to a monthly payment that these folks can afford and that's supported by their income. That's their calculus, really overly simplified. So each individual has got to make the decision about, does that work for me? Some folks just feel like, hey, I'm renting at a loss at this point. I'd rather get out of it and get a clean slate. And we'll talk about that as we move forward, if you get to that point. But for a lot of folks, it's the only way that it stays affordable, or that it can be made affordable again, especially if they've had an extended period of default and there's a pretty major arrearage. If you're getting hit with that in the short term, you'll never pay it. If you can spread, those tens of thousands of dollars over a 40-year term, all of a sudden, at least in the short term, you might be back to a monthly payment that's digestible and affordable, even if you don't love what your new overall loan balance looks like or how long your payment term has become.
So
one other point I do want to make, because Celia mentioned about taxes earlier. I don't want to go too much on a digression, but that had been almost the number one and number two thing that people have been calling me about pre-COVID. Taxes were just causing a huge amount of problems for people who were about to go on default, like your client, Celia, and then with folks that we're trying to work on loan mods with. We get the bank to give us a very affordable principal and interest payment, but their monthly escrow is like double, so that's a separate but related issue that I think is going to create a lot of headaches for people. If there's not property tax relief here, we're going to have a big problem even a year from now modifying these loans, because those escrow payments are going to be really, really high, even if the principal and interest is brought down to an affordable payment. So I just wanted to get that out there because I thought that was a really salient point and something that we've dealt with a lot over the last couple of years in Cook County, especially.
Faisal, it looked like you were about to piggyback off of that. Can you also speak to, during a modification or really a forbearance, because that's what I hear most conversation about right now, the importance of, borrowers asking who's handling the insurance, the homeowner's insurance, and the real estate taxes, even during a time of forbearance, because I do think that that's also a conversation that, if the lender says, hey, we can defer it, it kind of leaves a little bit up to chance. Those
are really good questions. What I would say is, especially for those who are looking for loan mods, right? So let's talk about a few things really quick in terms of the different types of options they have available, right? Because you're talking about the typical options for modification. And so you've got the forbearance, which is where they're pushing away payments down the road where they're going to repay later. And so there's a great intro video actually that HUD has put out, Department of Housing, I think, or the HUD that HUD's put out. And I can put that link on the chat and throw that out there so that way you can pass it around. But what they're requiring is that people have to pay this money back. That's the big issue. So if you're getting 3 months or 6 months, so what they're offering, for example, if you are Fannie Mae, Freddie Mac, or any of the other government loans, they're offering 180-day forbearance, which means you don't have to pay your payments for 180 days. Now you have to call your servicer and ask for that, and that'll push your payment out 180 days. And then you can ask for another 180-day extension at that point. What we don't know yet is what is the documentation they're asking for. So historically, some of them are just doing it, and some of them are requiring proof of the furlough or proof of loss of income or proof of loss of job. which for those of us who are self-employed, that's very difficult to show that I fired myself. But it's, those are some of the things, but they'll have options available to show that there's a request for the extension. What they have continuously said, even the government loans, is no matter how much forbearance they're giving, they are requiring it to be paid back. So whether that's adding it to the end of the loan, whether it's all due within, I think one private lender had said, okay, yeah, you can hold off your payments for 3 months, but by the way, all 3 months are going to be due in the 4th month plus your 4th month mortgage. Well, that just doesn't make any sense, right? So the question that you asked regarding insurance, what we found was a huge problem for those who are loan modifications was that they would do this forced place insurance. And forced place insurance is when you stop making your mortgage payment, when you stop making your mortgage payment, the presumption is you're also stopped making your insurance payment. And so for those of us who have insurance escrowed along with the taxes, if there's no money in escrow, they're not going to pay your insurance. What they end up doing is they go find other insurance, which is, interestingly enough, is a profit center for a lot of these banks, where now what was normally $1,200 or $1,500 for a whole year could become upwards of $500 or $600 a month. So you're looking at from $2,000, worst case scenario, what your insurance would be for the whole year. Now they're charging $5,000 or $6,000 for the same type of insurance. So if you're looking to get a loan mod and you want to keep your home and you can afford your home, definitely make your insurance payments. Okay? And the other one you definitely want to make for those who are living in condos, your condo association payments. Do not stop making those payments because those two things can be very detrimental. For example, like if you stop paying your taxes, you've got 2.5 years, 3 years to redeem. And on the mortgage, you'll have time on the mortgage, right? If you go into foreclosure or that takes a delay in the loan mod, you're looking at least a couple of years before anything, drastic in terms of you have to leave. Drastic, I mean where all the options have been exhausted and you must leave the house now and be evicted. Insurance is a big one. Homeowner association is another big one that you should definitely stay on top of. I think I answered your question, right? That was about the insurance and the taxes.
That was the answer. And then as it relates to the real estate taxes, is that something else that, and I got that you said it was, that's something that could be deferred and you don't necessarily see an initial impact the way that you do with homeowners insurance, but is it also something that, that you want to track and be cognizant of?
I think so. Just so you know that the taxes is very dangerous. If the taxes are sold, that's dangerous to your lender as well. So whether you escrow or not, the lender is going to pay your taxes for you. And so at least there's avoiding of having to pay any penalty to the county that would normally happen if your taxes are sold. So that's one good thing. However, that means they're going to add that into your escrow balance. That means they're going to add that to your payments as part of the deferment. But kind of, it's one of those things where if you're already in, trouble, you're already in that circumstance, then what I have advised my clients is cash flow is king. If you have cash flow and you have cash, you can always buy yourself out of your problem, which means if the bank is paying the insurance, if the bank is paying the taxes, if the bank is paying all those things and you're not paying them, right? What that does do is that gives you an opportunity to save your cash for when it's time to move, you can move into and pay a nice hefty security deposit. So really it comes back to that step one question, which is, do I make my mortgage payment? Am I staying? Am I going? What is my, 1 year, 12 months to 18 months or 24-month plan? What can I afford? If I was making $50,000 a year as a job and suddenly now the only job I can get is $24,000 a year, then I clearly can't afford to live in my house anymore. And now I got to be thinking, I have to change my dynamic from what do I got to do to stay to how can I stay here as long as possible for as cheap as possible. So those are the two big questions to ask, right? And then how that plays in for the professionals. So for our Realtist members, right? For them, this is the help they can help guide the homeowner to answer this question, right? What is the value of the property? What's how much money is the borrower making now versus they made before? What can they afford? So like a good number is if your housing payment is 35% of your total income, right? That's like a benchmark. So 35% of my income should be towards housing. Now, obviously they push the limits higher, but that's just a good, place to start. And as Realtist brokers, by teaching and helping our clients or the borrowers what that scenario is, could lead to the next piece, which is helping them find a rental they can move into. Now, it's not the same as a new house, but then if they're leaving this house and it's not going to work for them, now we've got the short sale option, right? So then the broker can make their commissions and make money and feed their family by selling the house as a short sale. And here's what we found historically over the last, 10 or 12 years or 10 or 15 years is that when you're doing a short sale, borrowers can get relocation assistance if they're leaving their house. So that can be anywhere from $1,500 to as high as $10,000 or $12,000 we've seen, where they can get financial assistance to leave the house, right? I've actually even seen short sale brokers where they would give back some of their commission and refund that back to the homeowner to help them leave. You have to be careful of the legality of that, so make sure you have the attorney helping you with that. But there's options, right? So
Agreed. So that's a perfect segue into the short sale conversation. But I want to kind of recap just a few things as it relates to loan modifications. And if individuals right now are thinking that, this should be a time, or this is a time that they are exploring that, number one, we need you to get in touch with your loan servicer. Your loan servicer is the company that takes your payment. That's the first thing. Number two, realize that every company has a slightly different process. So, be ready to have your questions lined up, regardless of what, that process might be. Number three, there are some very specific guidelines for loans that are backed by FHA, by VA, by Fannie Mae, and by Freddie Mac. So, just know that there are guidelines to the process, although I do believe that we'll probably see a lot of that shifting as we continue to move through the process. So I'm going to kind of fast forward because we have talked a lot about the loan modification process, and I definitely want us to get right over into short sales, which is the second option typically once the borrower has decided that they are no longer going to occupy the property and that it's not affordable. And so Faisal, you were kind of chiming in and speaking to, the short sale and just the different benefits to both the borrower as well as, the real estate broker inside of, a short sale. Can you kind of break down what a short sale is for our audience today?
So a short sale is when if the house is worth, for example, $200,000, I owe $300,000. So now the loan is what we call underwater, upside down. So I owe more on the house than what the house is worth, or I can sell it for. Or because I haven't paid mortgage in 6 or 7 or 8 months, all those payments have piled up that have made it difficult to sell the property. So the short sale makes sense when the value of the house is less than the mortgage. So when the value of the house is less than the mortgage, a short sale is when the lender agrees to take less than what they're owed and forgives the balance. That's a very important part because a lot of people have done short sales and said, oh, I still owe more money, so I sell the house and I still owe the balance. That's a horrible short sale. So I wouldn't do that short sale, and there's a better way of doing it. But a short sale is they waive what we call the deficiency, which was the underpayment to the lender. And the lender agrees on certain terms to take less money, okay? So that's essentially what is a short sale, and it takes place once the loan is in default. The other piece I want to indicate on the short sale is, even if you've missed all of your payments and you haven't paid for some time, so long as the foreclosure isn't finished, right? They haven't gone to sheriff's sale. That's the big one in the foreclosure. You can still list and sell your home. Now, there are certain timelines regarding that, but there's a 30-day window prior to the sheriff's sale. However, many people think that the moment the foreclosure has been filed, or the moment they've missed the payment, they leave the house. Don't do that, right? You stay in the house, but while you're there, don't fall asleep. So stay in the house and talk to your Realtist professional, your short sale professional, your attorney, whoever it is that you have found to help guide you through this. Speak to them, but stay in the house. That's very important, because you need a place to live. And if you haven't made a mortgage payment, you're clearly not having to have to pay rent anywhere. So stay in the home and work with a professional to help you sell. If that's the choice, that the house is no longer viable or feasible based on your current financial situation, you can now sell the house and list the house for sale.
Wonderful. So basically, in a nutshell, a short sale is when a lender approves your offer to sell the home for less than what is actually owed on it. And that is one of the benefits to a buyer that we've learned in recent years, is that you can potentially receive some type of relocation assistance. And if I heard you correctly, Faisal, you also said that if you receive a deficiency judgment after a short sale, that was probably not a great short sale option.
That is correct. So usually what will happen is they'll agree to take less, and they'll agree. So in order to get the short sale, the very first step is making the assessment that you want to get rid of the property, okay? And then the second thing is listing the property for sale. The third thing, which is the Realtist brokers would be huge help on, is helping collect the information that the borrower will need to submit to the bank. That's a huge struggle for many borrowers, and that's one we've struggled with when dealing with borrowers that we've worked with, is getting the tax returns, the financials, the bank statements, any pay stubs. So the bank, whether it's a loan mod or a short sale, they're going to ask for that information to be submitted to the bank, so that way they can assess how to, what we call, restructure or modify the loan. Where it's different these days in COVID-19 is they may not require all of that documentation like they had historically, just because of the CARES Act. So that's a good thing. But as this gets further along, what we found is banks have really bad habits. And so they will revert to their worst form and their worst habits of requiring a ton amount of documentation, getting lost in the shuffle, losing paperwork. We actually had this is kind of funny, we actually had a loan that we were doing a short sale. We submitted the entire package, ready to go to sheriff's sale. So we were like on a time crunch, and it was sitting on a woman's desk who was pregnant and had left for maternity leave. And the package just sat on her desk in the corner, and nobody even knew what was going on with it. And we kept calling, saying, what's going on, what's happening? So they're humans too, but they're also completely disorganized. So that is something that we have to face, especially with the fact with so many people submitting for loan mods and short sales and assistance in this time. And just to give you some frame of reference, the default that took place in 2007 and 8 that led to that big, huge crisis, a lot of it was in subprimes, but overall in the total marketplace, it didn't break. When they finally started having problems was when the default rate was around 3 to 4%. Okay, that was the entire year of 07 and into 08, and it slowly climbed up. And the highest ever in terms of mortgage defaults over the whole country, all loans, was really no more than 9.3, 9.4%. In COVID-19, they're talking about a 20% default rate. So this truly is unprecedented. So I kind of veered away a little bit, but so involved in a short sale, definitely an experienced real estate agent and an experienced real estate attorney who knows how to do short sales, and an experienced real estate agent who's familiar with the process. It really should be only a realtist. That's my personal opinion, because for many reasons, but it's a little bit closer to home, and the short sale specialization is important because there's so many nuances to the deal, and especially when it comes to picking either one of these professionals, because if they don't understand how to submit a package, and there was earlier yesterday, former President Brother Ron Branch did an entire thing on BPOs and appraisals. That's also a critical piece of this, right? So understanding how to do the valuation the bank would look at is important to determine what the property will sell for and what the bank would accept. So, and then a realtist broker who understands the pieces of what's required in terms of documentation and putting that together. On the attorney side, it's not just an attorney who does real estate closing. I think it's important, in my opinion, that a real estate attorney has to have the understanding of the foreclosure process, the court process, in addition to the transaction process, because they really go hand in hand. There was a term that we had coined way back when in the beginning of the '08 crisis called dual tracking, which was banks would be talking to you for your loan mod and helping you, but they would be also going through on the foreclosure process. So while you're communicating, they're foreclosing, and by the time they finally give you a loan mod denial, they would have already foreclosed and taken the property. Now, in COVID-19, depending on the servicer, all the government servicers have stayed their foreclosure and eviction actions by 60 days. And most servicers are holding off on filing new foreclosures and are frozen because the courts are stalled and stopped. There's no. So the important piece of having an attorney who understands how the foreclosure works in court can get them to stop the foreclosure or stall the foreclosure while you're negotiating your short sale. That's an important piece, which is why when our realtors brokers are looking for those partnerships, you want to find someone who has a balance of both worlds, who can litigate and negotiate, who can do transactions and go to court. That's an important thing to look for when you guys are looking for real estate attorney professionals. So
I'm gonna add a shameless plug in there. If you are not a realtist and you would like to become a realtist, I am sure that our first vice president is going to, before we are done today, put our website link in the chat room on Facebook Live, and you can join us today. We would love to have you as a member, and we thank you for showing up this morning, even to take part in this class. I'm going to jump over to Damon as we begin to talk about the foreclosure process and the act of the bank actually taking the property once there is no resolve in terms of actually receiving payments. And so if you can talk to us and speak to us a little bit about the actual foreclosure process, Damon, that would be awesome, specifically from an attorney perspective.
So the good thing is in Illinois, we're a judicial state, which means they can't just go straight to sale. They have to go through a court process. Not every state is like that. So I think we're fairly fortunate here in Illinois that there is a mechanism and there's some statutory protections that are built into that. You know, the first thing, like I've talked about, is being proactive. I think that really applies if you find yourself in foreclosure. You know, we always tell people the sooner they get to us, the more options they have, whether it's litigating the case, reaching resolution, or both. You know, but very basically, you know, it's a lawsuit. You know, so if you get too far behind, you know, it's usually 4 months of missed payments. they'll file a case against you, and the loan balance will be accelerated. So at that point, they're saying the entire balance is due and owing. They file it. If it's here in Cook County, most likely you'll get served by a special process server, et cetera. So what I would advise anyone is, if they have clients who are on the verge of being in default, or if they've just gotten served, please tell those people not to ignore it or not to put their heads in the sand, because part of the double-edged sword is, in Illinois, the process doesn't always move that fast until it does, right? So what I've learned is that there's a lot of urgency for folks at certain mileposts in the case. When they first get served, a lot of people go, oh man, I need some help. If they don't get it or they don't act quickly, nothing might happen for 6 months or so. Then you get a motion for a judgment in the case. Some folks wake up and come to me at that point and say, oh, I got a judgment pending. It's not ideal, but usually I can still help them. If they wait till after that judgment has been entered and a sale is pending, that's kind of the next wake up and I need help point. Sometimes we can do something, sometimes we can't. If the judicial sale has occurred and we don't have any good reason to stop it, then we're just talking about, okay, we can get you a little more time before you have to move, but we don't have a lot of leverage. So I always make the analogy, and it's not perfect, but it's kind of like going to see the doctor. If you come to me relatively early, I can probably fix what's going on. I can diagnose it. We can get all the options on the table. I have enough time to figure out what's happening. If you come too late in the process, I'm probably just easing your pain, but the bad thing is going to happen. So that's the way I look at it. And right now I'm hoping that there's not the amount of shame like we've talked about associated with this, and that people are proactive. But I think it's on us as professionals to be out there as much as we can, telling people, if you can't get this modified, or if your loan company isn't getting you to an affordable position and you do get filed upon, seek out a lawyer as soon as possible, because at minimum you need some advice. I believe everybody needs representation in this process, but at minimum you need some advice and some guidance, because it's really overwhelming just facing the loss of your home. But it's also such a technical landscape, both in the court process as well as how these loans are owned and governed. I mean, we could talk about it for 2 hours, and you're going to hear Faisal and I say, it depends, or this is a variable, or we're not sure yet. We've been doing this for 10 years. So I think especially right now, there's a ton of uncertainty, but I'm hoping that people do reach out to the professionals in their network, whether it's a real estate broker, an attorney, et cetera, and get some assistance and some guidance, because the process can be lengthy, but if you don't get to me by a certain point in the case, I'm really limited in what I can do as far as helping and kind of stemming the tide in that foreclosure process.
So can you speak a little bit to, and thank you for sharing that. I absolutely agree with everything that both of you have shared thus far. It's been an amazing session, and some really good knowledge and information is being shared today. Faisal, can you tell us a little bit about what dual tracking is?
Yeah, absolutely. So dual tracking is what banks do and lenders have done to borrowers. So borrowers will call. So dual tracking is when they are talking to you about your loan mod on one side. And so you're talking to them, send me this document. Oh, we missed this bank statement. Oh, we don't. And a lot of us have gone through this in the 08, right, crisis. Oh, they spend 3 months of going through your documentation, and then the 3 months of bank statements are stale now. They want a whole new 3 months of bank statements. And so while they're doing that, or when the paperwork is sitting on the desk of someone who's on maternity leave or paternity leave, or any of those, or they went on vacation for a month, right? So all of these things that are happening, while that process is being delayed and taking forever on the loan mod side, what they've done is they've lulled the borrower to sleep, because now they've gone a second track in parallel, which is dual tracking, where they're talking to you on loan mods, but they're also foreclosing on your property. So they're pushing that fast because they want to take ownership of the property. Because there's a couple of things here. So one of the things that came out of the crisis was, we found for the last few years, is that fewer lenders were approving short sales. And we couldn't figure out why. And then it turned out that servicers, who actually are the ones, so the servicers are the ones who collect all your payments, and then they give it to the real lender, okay? Who would be Fannie, Freddie, or some hedge fund in New York or whatever. But these servicers created a secondary business model where they would take properties they would rehab them and do the construction, and they would charge the lender a lot of money. So they create a whole new profit center around rehabbing foreclosed properties. So what this did was they were less likely to approve short sales because of that.
So wait, I got to pause you right there because if I just heard you correctly, what you said was servicers created a whole new market for themselves by which they became rehabbers to lenders.
Correct.
Yeah, my mouth is on the floor. That's unconscionable.
Yeah, we couldn't figure out why short sales suddenly stopped getting approved from certain servicers, and we found out that that's what they were doing. Now, with this current crisis, right, I believe that that's going to change because the volume and the inventory is going to be way too high for them to do all that. Okay. Then the reason they created that was because there wasn't a lot of defaults, and there wasn't. They make more. So servicers make more money when you stop paying your mortgage. They don't make as much money when you're paying your mortgage. So they're not in it to help you keep paying your mortgage. They're hoping that you default. That's a whole nother side of that, right?
Because we always hear this, and I'm not going to interrupt you, but I hate to interrupt you, but we always hear the bank doesn't want your house, they want your money, right? So this is kind of a complete new paradigm shift that I am even having inside of this conversation with you, because I have always been told the bank doesn't want your house, they want your money.
So yes, but this is not the bank.
Okay.
This is the person in the middle who is collecting the money for the bank. This is the person in the middle who goes, well, how can I? Oh, let me manage the property. Let me fix it. So so you've got the middle broker, or the middleman is finding a new way to make more money, right? And overall, banks really don't want properties. However, because of the '08 crisis, there was a huge paradigm shift in how they're dealing with their own REO portfolios, right? So there's a lot of banks who don't want to deal with the property and don't want the asset, and the bigger banks are focused on big things. But what they did was they would sell their portfolios to smaller groups, where they'll take 100 loans or 1,000 loans or 5 or whatever, and they will then want those, and they'll rehab some and get rid of some. So the shift was, as the number of foreclosures came down, right, over the last 8 years or 9 years, new opportunities of business opportunities, and when there was a shortage of inventory. I mean, as every Realtist broker knows, the number of distressed properties that were available pre-COVID had gone down significantly. It was very hard to find a good rehab to rehab and sell and have some profit in it. Now that's all obviously going to change, right? But it's the dual.
I think you're freezing up again there. So I'm going to the dual tracking, and then once you pop back in, you can pop back in. But perfect.
Because I want to make a point, and I think it's an interesting concept. The bank doesn't want your house, they want your money. I think that's probably true as far as it goes. But Faisal just mentioned, we always need to keep in mind there's this middleman, this loan servicer, this loan servicing company. They have such different incentives than what we would think of, because they're not the owners of these loans, right? They're middle people, and their profit margins and their business model is often predicated on delay. And that's what we've had to learn, because we've been in some of these cases for years, and we think, what are these companies doing? And then you take a step back and you go, they get paid a monthly fee, right? They get paid to manage this. They get to tack on late fees. They get to tack on property inspection fees. So I don't want to go too far on a digression here, but I think one thing to keep in mind is we got to understand who all the players are. And we have to think more deeply in a more nuanced way about those rules that we've always considered. Because what I've learned in doing this over the last few years is the motives of these companies are often different than their bosses or the owners. And I wonder sometimes if Fannie Mae and Freddie Mac knew what was going on, or if they audited these places and what they would find, because I think a lot of the non-bank servicing companies have gotten really, really wealthy over the years And I'm really concerned that we're going to see the worst of what we saw in the last crisis come up again, and maybe then some. Not just from a profit motivation standpoint, but because they're deeply bureaucratic and they're understaffed and they're undertrained, and the volume is going to hit them. So I want to be really cognizant of that and understanding in kind of a broad sense how this stuff all works together, because I think your point is correct, but that model doesn't necessarily exist as much anymore. And the model that we're in now, I think, is fraught with problems, even under ideal circumstances. And I see these loan servicers acting in their best interest, moving forward, and understanding how they get paid, I think, is critical to understanding how some of these decisions get made.
You all are just you're sharing a lot, and it's a great conversation. And of course, as a lender, I know that there's a difference between the servicer and then the secondary market even. But you guys are opening my eyes to some new ways of thinking that I had not been privy to. So I thank you for sharing that. I would like to, before we jump into any Q&As that we have or we may have online, I am in the chat room. So if there are any questions, please feel free to go ahead and share those. We are just a little bit over the 1 hour mark. So I definitely would like to thank both Faisal and Damon for their time today and for kind of sharing with us and giving us some great insights as to, not suffering in silence. What we have been talking about today is that the world is in a pandemic. So this is really an open invitation to assisting individuals that may actually think that they are about to be in trouble, or maybe you're already in trouble. The conversation that we're lifting today and the conversation that we're raising today is, if you're in trouble, reach out to a realtist. Reach out to someone that you can talk to and that you can trust, and therefore get the guidance and the assistance before things are too late. Know that it's going to take some time right in through here. The banks are all overwhelmed in many different facets, from the SBA loans to the PPP to individuals who are not able to make payments. So I think that there's also just a lot of activity. So be prepared to be diligent with contacting the bank, with staying on hold, maybe getting up a little bit earlier, figuring out what the hours of operation are for customer service centers. But at the very least, if you have additional questions that we can assist you with, I am going to ask both Damon and Faisal to share their contact information as we go ahead and take a look at any of the questions that we might have in the chat room. So I'm going to open it back up to Faisal first for maybe any final thoughts, things that we haven't discussed today. As I look in the chat to see if there are Q&As, and then please also be sure to share your contact information, and I'll make sure to get it in the chat as well.
So I'm hoping my connection is better now.
Yes.
Okay, good. So one of the things that I wanted to just touch on was on the last piece, the dual tracking, was the importance of what we found, right? Banks, and with respect to you, Cecilia, I know you work at a bank here, but overall, the banks and the servicers are bullies. And so what we found, in the same way you would treat a bully on a playground, what we found is a strong attorney or a person who can actually push back against the broker, against the bank, or structuring the person in such a way where they're insulated from any attack from the bank, where the bank can't collect or there's a problem. We found that the banks are very quickly wanting to negotiate. They're not in it for the fight. It's not personal, it's financial. So we found when we've made it very painful for them financially, they tend to, they're more likely to negotiate on the loan mod piece. There's some things there that they're now, oh wait, we can't easily dual track you. We can't easily just, okay, so now we have to negotiate. So I found that to be very, very helpful. So that was my last kind of final piece.
When you say make it painful for the bank, tell me, can you share any insight there?
Yeah, absolutely.
Yeah.
So when they, for example, if you submitted 4 loan modifications and they keep losing them, there could be a violation of some consumer laws there. So bringing an attorney that brings a counterclaim that sues the bank, we've had payouts where banks have paid out $100,000 or $200,000 in penalties and fines to our borrowers, right? Because they've made mistakes. And other lawyers and other consumer protection lawyers have also been extremely successful in doing that, by forcing the bank to pay out that they've made a mistake.
So are you saying that when a buyer, I'm sorry to interrupt you again, are you saying that if a buyer is applying for a loan modification and they are being asked for documentation over and over and over and over again, which is what I hear a lot of when individuals are going through that process, you're saying that there are ways to actually, that's not a practice that should be in the process? That's the first question, I guess.
I'll actually defer to Damon because I saw him pop up and sit up on that one. So I know he's had, because he's the big I do the litigation as well, but he's been the consumer expert in terms of consumer protection. So I'll defer to Damon to tell us kind of where he's found some of those pieces to be gems.
Yeah, so without getting too technical, there are federal guidelines that apply not just to federally backed loans, but really to all loan servicers. So the key, I think, is to be really, like we've said before, diligent and document what you're sending in. It's hard to answer because almost every person has some complaint about, I had a redundant document request or this took too long. That's just industry standard even right now. What I will say is if people can clearly document when they send something in, there are requirements that loan companies not only have to look at it, but they have to send you an acknowledgement letter and say, hey, we've got a full packet from you, or no, we do not. We need this document. So it does get pretty technical, but that's why I think it's critical for borrowers to understand what they're submitting, when they're submitting it, and then monitor the responses and be proactive in following up. The cases where we've really had nice outcomes is where people brought their file to me and said, look at everything I've done. It's not just anecdotal. I'm really upset and this took 6 months, because I know that happened and I know that's a violation. Where I can prove it is when they say, I sent something on May 1st. I never got a letter. I followed up again on May 15th. It disappeared. So there are requirements that these loan servicers have to follow that they already are pretty loose with. And I have a feeling that's only going to get worse with this volume, even if it's not intentional. So that's my tip, I guess, for people is document what you're sending in, be diligent in following up, demand everything to be put in writing. You're for sure going to get pushback, but when and if you do have to come see me, and unfortunately, I think a lot of people are going to have to do it, if you can hand me that file with all your notes, I can turn that into a pretty powerful claim, and we can get some leverage in these cases. And that's really what it's about. It's trying to get the bank to the table and to treat you more fairly. And unfortunately, like Faisal said, it's kind of like dealing with a bully. I've learned that you have to punch them back, for lack of a better term. And it's frustrating, but I think that's going to be the remedy that a lot of folks have to follow here. I have a bad feeling there's going to be a lot of really disgruntled borrowers that have been mistreated or treated unfairly. And if they can come to my office with their documents, I think there's going to be a lot of claims here. And I think we're going to get some restitution for these folks, but it's going to be a process. So I want to start laying in the foundation now, because I can foresee what I think is going to happen a year, 2 years, 3 years down the line.
So if I want to just to add, to clarify what Damon just said, because it's probably the most important part of the entire call, right? So you're making phone calls. You're picking the phone and you're calling and you're on hold for 2 hours. Take a pad of paper and call it your loan modification pad. And you put the date that you made the call and what time you started. And then you put the time that it ended. And if you didn't speak to anybody, mark you didn't speak to them. If you spoke to someone, get their name, okay? And then what happened. So just a few brief notes. And then you just keep that going every time you call, every time you speak to them. And then whenever you send a document, you want proof you sent it, right? And that doesn't mean, I put the date in the corner. That means if you sent it by fax, and yes, believe it or not, the lenders still use fax machines, okay? You want that fax cover sheet that says how many pages were sent and who it was sent to. That's so critical, because from that day, they have a certain number of days that they have to send a letter going, we got it, we got your whole package, we're reviewing it, or we got everything, but we're missing this bank statement. So I can guarantee you, right? Now, I don't guarantee many things, but I can guarantee you with the volume of applications taking place, they're going to drop the ball. Okay? And with that ball being dropped, opens up an opportunity for you to get paid. Okay? And having a Realtist broker who can help you put that stuff together, understand the documents, that's one way of making sure kind of working along the process. Now, the hard part is this is a lot of time and effort, and someone would want to get it paid for it. So be conscious of the Mortgage Fraud Rescue Act in Illinois, if you're an Illinois broker, that the Illinois Mortgage Rescue Fraud Act dictates who can and cannot get paid in advance for the work that's being done. But to double on what Damon said, it's really important that when he says document, that's what he means. Okay? So, and every paper you get from them is important.
Well, we really appreciate all of the tips that you have shared. I do want to just kind of put a quick disclaimer. So the Dearborn Realtist Board is not telling you not to make your mortgage payments and then document everything. What we are sharing with you is that if your family, if your friends, if other individuals that come to you share that, they are falling behind on their payments, they're having a hard time with the bank, they're trying to work through the best situation for themselves and their family, that please highly, highly, highly encourage them to document everything, every conversation, every phone call, every email, every fax that is being sent to the bank, such that in the next couple of years, to progress, that they have a very clear picture of that they were intending on and that they were attempting to have things worked out. So with that being said, Basil, I'm going to ask for you to share your contact information. How can people get a hold of you?
Sure. You can reach me. I'll leave our office number. Well, first of all, our website is www.foreclosuredefenselawoffice.com, foreclosuredefenselawoffice.com. You can call me. I'll leave our main office number is 312-775-0980. My email is mfaisal, M as in Mary, Faisal, Faisal, at evlawgroup.com, edwardvictorlawgroup.com. And I'll send that to you right now, Cecilia, so you have that. And you can post it.
So Damon, we've got your office number. Can you also share your email address?
Yeah, my email is dritenhouse@edwardvictorlawgroup.com.
Wonderful. Thank you guys so much. We appreciate you for sharing here at the Dearborn Realtist Group. It is Realtist Week around the nation, and if you all have not been to a National Association of Real Estate Brokers convention, if you've not been to a local meeting, I'm going to highly encourage that as we are in this COVID-19, that you begin to do some research for yourself. The National Association of Real Estate Brokers is an amazing organization that I have come to love with my heart and soul, and have met so many amazing people through. I am honored to be a part of the local board here under the leadership and tutelage of President Courtney Jones, First Vice President Gwen Newton. Gwen Shaw must be talking about me somewhere. Second Vice President, Madam Selena Jones. Not third Vice President, our membership coordinator and chair is Ms. Millie Reyes Williams. And I'm just super excited for all of the board of directors and everything that the Dearborn Realtist Board is up to this year. And so with that being said, please continue to check the Chicago Realtist Facebook page out. Tomorrow, as you can see, I've got my red sweater on. The Realtist Women's Council of Illinois will be hosting our WCI Cares. So we're going to be live partnering with Dearborn during this Realtist Week. Also, make sure that you check out NARAP. There are a ton of great classes that are happening online as well as in private rooms, Zoom rooms. So if you're not a member, I highly encourage you to get your membership done today. Get it done today. And I will also, once we're done here, go ahead and share the information with our amazing guest that we had today talking to us about not suffering in silence as it relates to loan modifications, foreclosures, and short sales. Thank you all so very much for joining us this afternoon. We look forward to seeing you tomorrow. Have a great day.
Take care.
Okay.
Thank you so